Hey, what's up? How's it going? Hope your day is going great wherever you are. This is back to the basics, episode 2, a little follow up from the last one, which was support and resistance lines as well as trend lines. Today we are covering RSI, also known as the Relative Strength Index. So, this will be a quick one because it's not too complicated. If you're on TradingView or Coinage or whatever, to get there, you would just go into your indicators and type in RSI and it'll pop up down here at the bottom. So just briefly, what we're looking at is basically you have a little zone here, and this is the neutral zone, really like around, like right here would be considered neutral, but this entire area in the purple is safe, you could say. If it gets above the 70 or below the 30 is when the indicator really starts getting useful, or if it starts getting around there. So basically, just a quick overview of what it means. The relative strength index is tracking all of the buys and the sells that are going in, and the amount of how much buy or sell action is happening. So on any big candles, you'll always see that the RSI is going to increase, whether it be one way or the other based on the color of the candle and the volume, right? So looking at the chart first, we can see this dip, and then like if we're just kind of following the shape of the chart, if we look at the RSI, it's actually somewhat similar, right? So here we see that it went down pretty low, and in the chart we see it went down pretty low. You can see that it went really high up to 91, and on the chart here we see this huge green candle, and then it peak up here at 0.06 or 0.006. Same can be said about this drop down here. We see it go pretty low here, down below the 30 into the 23. So what all does that mean? Well, you can use the RSI in order to kind of figure out when the trend is going to start reversing. And obviously, every indicator, I really want everyone to hear this, is that every indicator should be used with other indicators. So this by itself is nothing. It'll give you the right idea what's going to be happening, but you do want to use it with other indicators. So that being said, if it's sitting around 50, it's pretty neutral, not a ton of pressure going on one way or the other. If it gets above 70 is when we consider it overbought. So what that means is that there's a ton of buying pressure coming in. Too many people are buying. Around this point, you want to start looking to make an exit, just because there's too much people, it's getting overextended, and the selling pressure should start coming in soon. The same can be said on the flip side. If it's under 30, around or under 30, it's considered oversold, which means that the selling pressure is just too high. It needs to balance out, and people need to start buying it, which means the price could potentially fluctuate in the upwards direction. We can see that here with it being oversold right here, and then we see a bounce, and then we can see here with it being overbought. Very overbought, we see the dip down and the continuation, right? So same thing can be said here. It's oversold. So if you see it dip below this 30 line and you decided to buy in right here, knowing that it could potentially rebound off of this low, because the RSI, it's pretty low on the RSI, and it's going to be hard for it to maintain that for a long time. You would have had just a little bit of low further down to go, but on the flip side, you would have bought and you would have gained, let's see here, I think it's this one. So if you bought on this low of the RSI, you would have bought right here. And if you sold on the first, at the 70 mark when it became oversold for the first time, you would have gained approximately 13%. So that's just using those indicators. Again, it's pretty basic stuff. If we did it again here, if we bought when it was oversold for the first time, and then sold up here when it was overbought, it would have been 6%. And if you somehow used other indicators to see that it was going to keep going, you could have made almost 25% on that run. So that's just a quick little tutorial on how to use RSI. Again, if it's getting close to this top band, you want to start looking to exit your position. Definitely don't want to get in when it's up here. And if it's down on this bottom band here, you're going to want to look to enter the position because it's probably not going to stay down there super low for a ton of time. So you should be looking for a quick bounce. I love RSI for day trading. I like it on the 15, the 5, the 30-minute charts. For longer term stuff, I don't necessarily use it. I'd rather use something like the MACD. But again, for short-term trades, it's really helpful to see where that buying and selling pressure is happening and use it in conjunction with other indicators to see what could be going on. So I hope this quick little RSI tutorial was helpful. If it was, go ahead and subscribe to my channel. Leave me a comment letting me know. Let me know in the comments as well what other indicators that you want to know about and how you want to see them traded in this Back to Basics series that I'm doing. Got a couple more planned in the coming future, but hope you learned something. Like the video, subscribe, and leave a comment. Peace.